The best of money matters. Under the radar.
You're listening to Money FM 89.3 and it's now time for Under the Radar with me, Chua Tian Tian. Now, the property market is in focus today as we speak to a leading real estate technology company that operates real estate portals across Southeast Asia. Now, launched in 2014 as 99.co, our guest, 99 Group, was conceived during the 2008 US mortgage subprime crisis, an event which the firm believed was born out of desire and misinformation. Now, the founding team at 99 Group hence made it a point to make the company into a simple and trusted platform to uncomplicate the property journey. Now, this can be seen in the firm's positioning strategy, where it aims to differentiate itself from other property search websites through its user-friendly designs with features including price analysis data, finance planners, smart filters, as well as the ability to search by map or commute time. Now, fast forward to today, 99 Group is said to be one of the fastest growing property portal firms in the region, with a presence in both Singapore and Indonesia. The group is set to specialise in digital property advertising and has a portfolio of 3 brands, namely its flagship 99.co property portal and srx.com.sg right here in Singapore, as well as 99.co/ID and Rumah 123 in Indonesia. So far, 99 Group said it has achieved what it described as solid growth, with revenues of $17 million recorded for 2023. That's a CAGR of 47% since 2019. But what are the key trends the firm is capitalizing on to take it forward, and which are the markets with the biggest potential in the region? And also, what are the challenges for proptech firms, even as Southeast Asia rises as a hotbed for property, technology, or proptech innovation? Now, meanwhile, the ongoing narrative about interest rates in the region continues to weigh on home buyers and investors' minds. So how far has this influenced the types of listings that appear on 99 Group's platforms, and how is the firm attracting and showing the right listings to its consumers to increase retention and action? So many things going on at the same time, but let's speak to Darius Cheung, founder and CEO at 99 Group. He joins me in the studio. Darius, welcome.
Thank you, Tian Tian. It's a pleasure to be here.
Great to have you join us. And, we've briefly talked about 99 Group as this leading real estate company that operates your real estate portals across Southeast Asia, one of the fastest growing portal firms in the region, in fact. But let's hear from you. How would you describe your value proposition and business model today?
We are pretty much a classified business or property portal business, if you will. So fairly straightforward. On the supply side, we have anybody who wants to sell a property or market services to homeowners. They will be our customers, and we make it very simple, transparent, and easy for users on the consumer side to either look for property or look for services. So that's essentially at the crux of it as a property portal. But the question maybe is, how are we different? I think you go very deep, so thank you for your deep research to find out that we were created at the subprime crisis. In fact, many people don't know the original of the name 99. A lot of people ask me, why is the name 99.co?
Is it 99-year lease?
Yeah. Is it 99? Why 99.co? Why not 99.co? Why not freehold.co? Actually, it's got nothing to do with tenure.
Okay.
It's got to do with that we wanted to serve the 99%. If you recall the days of Occupy Wall Street, the 99%, we thought that we should bring tools, data, transparency, decision-making abilities to the 99% so that they can actually make good decisions about buying a property, and thus helping us not get into something like a subprime crisis again. And that's essentially at the heart of our philosophy, and that comes out in very different ways. On 99.co, it comes out in some ways, and on, for example, SRX, it comes out in slightly different ways, and I'm happy to talk about that as well.
So let's, go deeper into your positioning strategy,
Sure.
right? You talked about how the desire to simplify things for the end user, for homeowners, that has played out in different ways on your different platforms. Tell us more about that.
So let's take 99.co, which is quite straightforward. Anybody looking for a property to buy, to rent, they can use 99 to find a property. It's particularly popular amongst the younger population, especially 25 to 45. And the real differentiation is really 2 things. One, we try to create more data and more information that the consumers can find. And then the second thing is that we create more tools such as filters. You mentioned transport information. So, for example, you can see listings on a map. That seems pretty obvious, but up to today, we are really the only one providing that. And a very popular filter, for example, you can find out how long does it take to. I want to find all the properties that both me and my wife can get to work within 30 minutes by MRT. You can create a filter like this and you can find all the properties available to you that fits those criteria. But of course, we first need the actual accurate information about the property first before we can even give you that information. So this is where we create more information, make sure that listings are easily found and easily filtered for with those information.
You mentioned that you are the only one that shows the distance or the commute time.
Yeah.
Was it?
For example, yeah.
How far have such features differentiated you from your competitors?
I think very significant, especially again amongst the younger population.
Yeah.
Buying a property, as an example, is a complex process, complex decision, right? When you're younger, probably first home or HDB upgrader, you tend to optimize more for practical things. And over time, maybe you have a bit more money, a bit more leisurely, you have a car, you care less about commutes, you care less about public transport. So it evolves. But for us, for our core audience, the young people, 25 to 45, it really matters a lot. Somebody was telling me quite interestingly, I didn't even know this, we have 29 property filters, whereas
29.
Yeah.
Okay.
So whereas our competitor actually have a lot less, like something like about half of that. So it really helps people narrow down to what are the best choices for them.
Yes, I recall using 99.co. There were a lot of filters. But speaking of your product offerings, right, Darius, if we look at 99 Group, it has a portfolio of 3 brands. Your 99.co flagship property portal. You have srx.com.sg. Both are located right here in Singapore.
Yeah.
You have your 99.co/ID for Indonesia, as well as Rumah 123. So take us through the roles played by the various platforms against the wider objectives set by the group. Which is the most important brand for you when it comes down to earnings contribution?
Oh, wow. A piercing question. But let's break that into 2 parts. The first part, the brand strategy actually is pretty obvious. We are quite transparent about it as well. So in Singapore, 99.co is the popular property portal where people look for listings. SRX is more known for its data and analytics, in particular X-Value, which is pioneered. It is the automated valuation model where you can actually punch in an address, we can tell you how much your property can sell for, and it's roughly speaking 98% accurate. So that's probably the most popular feature on SRX. And we acquired SRX, I think, about 5 years ago because it has about a third of homeowners registered, always checking their property prices every day, every month, what their neighbors sold for. And that's to service more and more the homeowners more than the home seekers. So that's where the differentiation is. In Indonesia, the development stage is a bit, maybe about 5 years behind compared to Singapore. So it doesn't have a lot of data yet, doesn't have a lot of analytics yet because of data availability. But the 2 brands are different because in Indonesia, we actually the dominant platform in Indonesia. We have about 80% of market share in property portal world. So we have Rumah 123, which is the premium portal. And 99.co, it is a freemium portal. What does that mean is that it actually has more listings because people can post listings for free. And in Indonesia, even the agent industry is that there's a lot of kind of casual or freelance or even homeowner selling their own house, which doesn't happen in Singapore. And they may not want a subscription. They may not want to put up 100 listings a year. So we give them a free portal so consumers can find all the listings. You
mentioned a lot about targeting the younger group, right? Till 35 years old, as you mentioned. 45.
Yeah.
Overall, are these mostly home buyers or homeowners across the four brands that you have? What is the split between home buyers, homeowners? What's the average ticket size here, and what do you take out of it?
Oh, we don't think of it as taking a cut out of it. We just, from a consumer standpoint, it's entirely free. So for us, so let me break down the question.
Okay.
So first is how much is home buyer versus homeowner. Actually, to us, most of the time they're one and the same.
Okay.
So you have, of course, your first-time home buyer. A lot of them are actually in Singapore buying BTO.
Yes.
So we do a lot of education, kind of like free national service education around that because there's no commercial model around that, right? Like no agent is selling it, nobody's advertising, we don't have BTO listings on a portal.
Yes.
But we do free education on on that, and then but once they
reaches a certain
age, usually selling the PTO after MOP, then the consumers would then look to upgrade, whether it's to a bigger HDB or whether it's a condo or other things. So that's when they are both a home seller and a home buyer. If they're a home seller, they'll be looking at X value for, okay, what's my house worth? How do I plan my finances? If I sell this and my OA is this and my CPF is that and so on and so forth, what cash do I get and what can I afford to buy? So that kind of seamlessly moved them into a journey where, okay, then now you want to look for property, then 99Co have all the listings and filters for you to look for them.
Okay. What is the average ticket size, if I may? I know it's a large range, but what is the average ticket size we're looking at over here, and you know, what's fueling your revenues?
Oh, yeah. In Singapore, our revenue stream are primarily from people who want to sell property. So either it's agents or developers. That's the majority. And then we have a few other advertisers, whether it's banks in terms of kind of promoting their interest mortgage packages, or whether it is Dyson or Nippon wanting to introduce their products to homeowners, especially. But primarily it is people who want to sell their properties. That essentially is our customer base. The average ticket size, if you talk about property transaction in Singapore, I think it's about, I forget, maybe $880,000, I think.
$880,000.
Something like that. I need to check my numbers. I don't have that offhand.
Okay, you talked about property agents. Yeah. Where do they fit in, or where do housing agents, real estate agency, and you mentioned developers as well. Where do the different players fit in this equation, and how important are they in increasing the retention and the effectiveness of your portals?
Yeah, absolutely. Property agents are probably the most important stakeholder for us. The property portal business is quite an interesting one, because property agents are both our customers, so they pay us a subscription fee for both advertising their listings as well as the tools, as well as they are also the supplier of listings and data. So we have to play this balance whereby you give me X dollars, I will make sure that you get X value or X business from us, but yet at the same time I'm going to police you a little bit to say that, hey, your information need to be accurate. Like, for example, right, we have a filter that's quite popular to say that, hey, whether the unit is pet friendly, where is it facing, is it high floor, low floor, and this information traditionally, before we existed, did not exist in the market. So you can't filter for, I want high floor units that is pet friendly, right? Today you can on 99, but we need the agent to be inputting that information. Most of them are very happy to just, okay, well, if I can do this, I get rewarded for it by my listings being found better, being featured better, being somebody who's looking for it and much more serious about buying this property. They are very happy to add the information, but we do a lot of work in engaging the industry to say that, hey, you should give more information, you should be more curious about the information so that consumers can find your listings better.
I think that's something that we missed earlier, and I don't want to pose you off the top of my head. Do you also look at rentals at this point?
Yes.
You do, right?
Yes. In fact, 99Co started as a rental portal.
I know, because you mentioned your own, I read somewhere about your own personal journey in finding an apartment and the difficulties that were involved. But moving on, Darius, let's take a look at geographies. Right, 99 Group is focused on both the Singapore and Indonesian markets. We see quite a lot of proptech firms focusing on Singapore and Indonesia in particular as well. But why is this the case for you? Which is the most important market for the group financially? And what is the role of Singapore market then?
Yeah, for us, so first we have been in Indonesia now, I think 8 years, probably somewhere around there. So the choice is very clear to us. When we look at the Southeast Asian market, the 6 core markets, if you will, it's very clear Indonesia is the one that we want to be in. The question is, do we want to be in more? And the reason is because, well, first of all, market size, right? So Indonesia is on par with Singapore in terms of the total market size in transaction value. Every other market is far smaller. But that's, of course, because Indonesia is 270 million in population, and it's just a big country. And that's why we needed to be Indonesia. We also saw that Indonesia's economy is very strong fundamentally. It's got very stable governance and very stable and very, very strong legal and finance regulatories. So that allows us to forecast and say that, hey, the Indonesia property market will be quite stable and is healthy for a marketplace like us to exist. Versus some other markets you might have seen have lots of speculations, bubbles, and that causes huge waves of cyclicalness. that actually is very destructive for marketplaces like us.
I would suppose that the model you have in Singapore, you can't exactly replicate that in Indonesia because it's a different ball game. So the question then is, what are some of the challenges in penetrating the Indonesian markets? How are things operated differently then?
Actually, you can. And in fact, we do exactly the same. And going back to answer your earlier question, right now is in terms of both revenue, profit margins, and so on, it's exactly half and half.
Wow.
Both are important for us. So both are equally loved. They're twins, and we actually see both growing. So going back to your question, our model is exactly the same. The difference is in the details. The devil is in the details in terms of execution, because Indonesia, as in aggregate, is half of our business. But if you come down to the revenue per agent, is far lower, for example, and we have to do the right type of engagement and efficiency for us to be able to achieve a sustainable business to serve our customers in Indonesia. And the reason is very simple, because if you just take let's assume average property agents do one transaction a month. In Singapore, you'll be selling $1 million house. In Indonesia, you'll be selling an $80,000 house.
Yes.
And the commission, let's say, maybe is the same, 2%. Right? So the actual net commission the agent received there, the income level is far lower. So the advertising spend he has to spend on a portal like us will be also far lower. And thus, our cost and our ability to serve this customer, or even just have somebody to call him and say, hey, this is how you put up listings. Let me educate you. Right? So we have to be far more efficient.
Okay. You talked about both markets are equally the same, maybe a little bit more work in penetrating and outreach for the Indonesian market.
Yeah.
But you set up your headquarters right here in Singapore. What is the strategic purpose of doing so?
Well, I think this is for us is because Singapore has just such strong talent pool and reputation for corporate governance, for finance, for legal. For all those reasons, Singapore is a great place to have the headquarters in. I'm Singaporean. I have a natural cluster of network and talents I can tap on when I build the company, which is why we started the company here. We continue the headquarter here and we'll continue to do so.
All right, now let's take a look at where things are at for 99 Group, Darius, because 99 Group said it has achieved what it described as solid growth. We're looking at revenues of $17 million USD recorded for 2023, a CAGR of 47% since 2019. What are the key drivers contributing to the figures? What numbers are we looking at right now in 2025?
We haven't published those numbers. We probably would eventually. Singapore being one of the reasons why we set up a headquarters here is because corporate governance is good. Those numbers will come out in ACRA filing anyway, sooner or later. So that's why international investors and capital markets trust Singapore, right? The transparency is there. Anyway, but back to your questions, we continue to see very strong growth. I think the other question was, how did we achieve this growth? To be honest, I think it's very, very early stage. I mean, you do a lot of this interviews with great CEOs, and you've seen many, many markets. If you track the performance of high-performing property portals anywhere in the world, UK, Australia, US, Spain, France, you will see that they have a solid 20-25 years of growth and doesn't seem to be stopping at all.
Yeah.
So we are at very, very beginning of the market. There's a lot more to do. So the answer is there's no trick to it. We just be patient and keep doing what we're doing. Are
you worried about reaching a certain point in maybe the mid or longer term where eventually growth tapers off because now you're at this beginning stage?
Yeah, in about 20 years.
Okay, still some runway.
We need to think about how to innovate in 20 years. I'm kidding. We always think about innovating for sure, but I think the business model doesn't need to change for 20 years because
the fundamentals remain unchanged.
And in Southeast Asia is a good spotlight because Southeast Asia's the market itself is growing. So in markets like Australia, UK, maybe the property prices are not increasing, the incomes are not increasing. So then property portal becomes kind of at odds with the market was trying to sell properties. And, it's a zero-sum game. In Southeast Asia, it's not. We see GDP per capita growing in Indonesia 5 to 7% year on year. Singapore probably 3 to 5% year on year. Property prices will grow at least at the same, if not higher rate. So many factors. Economy is strong. So for many factors, the market itself is growing. So And that's probably going to be the case for the next 10 to 20 years at a minimum. So it's a bit of riding the wave. Yeah.
Okay. Now, in the near term, though, Darius, the ongoing narrative about interest rates in the region that continues to weigh on home buyers and investors' minds. How has this influenced both the type of listings and the price tags that come along with them that appear on your platforms and demand for residential properties, particularly right here in Singapore?
Okay, so particularly in Singapore, we see that actually demand is still very, very strong. I'm sure you look at the markets and you can see that for yourself. In fact, more often than not, people complaining market is too strong, why is property so expensive, right? That tend to be, the sentiment tend to be the opposite. And I think that's got to do with, again, back to fundamentals. Despite all the noise, income level is good, wealth creation and wealth preservation is good. So a lot of people can afford to buy property despite the higher interest rate environment and have, more importantly, for a lot of property buyer. And property is one of those assets that's appreciating, right? So it has a lot to do with your confidence on the future. So you have confidence on the future, expensive, never mind lah, because it will be more expensive later. So buy first, right? So I think that has been the case and continue to be the case in Singapore despite higher interest environment.
Has a higher interest rate environment in any way changed the type of listings and the price tags that appear on your platforms? And what are you then doing to attract and show the right listings to the right consumers to increase retention and action on your platform?
I think at our current market share, pretty much we're reflective of the market.
The entire market.
Yeah. So we don't particularly do anything on our side, but what we observe from the market is that, certainly maybe less to do with interest rate than has to do with government policies like ABSD. So that is a bigger impact in terms of, there's less investment properties on the market because foreign investors, lots of capital that want to deploy in Singapore is, probably holding back because of ABSD. Yeah, partially because of interest rate, but more because of ABSD. So we see that shifting down, which is maybe a good thing. But the stronghold continue to be people buying their own homes. And the first home in particular, because second home, even Singaporeans have ABSD, right? So there are a lot of policies geared towards, for your own home, you are good, and that's a solid market, and that's going. Do we want to open up for investor market in terms of second homes or foreign investors? That's way above my pay grade.
And that's your and the peripherals of your business, so to speak.
If that opens up, it will help us grow. But we are a reflection of the policies, so we'll follow the policies.
All right, now if you're just tuning in, we're in conversation with Darius Cheung, founder and CEO at 99 Group. Well, Darius, setting our sights on the road ahead. What do you think are the key trends the firm is capitalizing on to take it forward? Which are the geographical markets with the biggest potential in the region aside from Indonesia?
Oh, wow. I think Southeast Asia as a whole is very strong. We intend to stay in just Singapore and Indonesia.
Why so?
Because for us, I think property is such a localized specialty. We actually develop a lot of skills and a lot of muscles to be really strong in both of these markets. And it takes a lot of localization, to be quite frank. And there's so much more to go in terms of both our value proposition to users on both sides of supply and demand side of the market, as well as our business model. So in summary, there's a lot more to do in local market where we already developed the muscles and the strengths and the team and the culture to do it. So it's better off, if I have $1, I'll spend it on Singapore and Indonesia. So that's where we'll stay. However, there's not judgment on markets. Other markets not being good. Many of them are very strong.
What do you think are the key opportunities in Southeast Asia, though?
Key opportunities, many. So many, ranging from making it... So Singapore is, of course, a lot more developed and probably the exception in Southeast Asian market. So, for example, X-value is now accepted as basically the estimation price that people always refer to. Just for your reference, X-value was used 10 million times last year.
Wow.
Which is about, I think, was it like 30 times the number of transactions, right? So every transaction you've got people using it so many times to just to check that this is the correct price to buy and sell at. But that doesn't exist in many places, including Indonesia.
Okay.
We don't have data there. We don't have transaction data there. We don't have comparables. We don't have valuation. And thus, we don't have a faster, easier way to give up mortgages. The banks can't give up mortgages. It takes a long time to get a mortgage. Credit history for individuals being able to get. So that's a lot of this that the market needs to do. A lot of it we can support in the process. So we have probably the best mortgage calculators in both Singapore and Indonesia, so on and so forth, right? So there's a lot more to do.
I do want to tap your brains on this one. I know you mentioned that you just want to stay in Singapore and Indonesia for the foreseeable future. But how far can your business operations in Singapore or Indonesia, for that matter, be replicated in Vietnam, the Philippines, and do the risks and returns make sense for any proptech firm?
It can and it will. So the equivalent of us certainly would exist. However, from a capital deployment standpoint, I mean, if I put on my hat as an investor, I would say that the incumbents are probably in a better position to capitalize on the growth of the market. All of these markets is natural incumbents in those markets already. To start a marketplace from scratch is a fairly intensive capital investment exercise. It can pay off, but you have to have a lot of patience and, to be honest, a lot of capital to get there.
And talk about capital, right? Darius, Southeast Asia, it is widely seen as a hotbed for proptech firms, proptech innovation as well, given the rapid population growth, as you mentioned, and acceleration of tech-enabled solutions as well. But proptech firms, they appear to face challenges when it comes down to funding because of a lack of proptech-focused VCs, lack of alignment in terms of the time horizon needed to generate returns. How would you read into that?
You touched on two different things. So first, proptech firms have challenges in funding. Actually, we didn't find that to be the case.
Okay.
At least we certainly did. I'm sure our chief competitor does not as well. I know that for a fact.
Yeah.
So we don't think funding is a problem. However, you are exactly right that the actual pain point is in alignment of capital's patience. The patience of the capital. So one of the challenges in Southeast Asia, and perhaps especially in proptech, is that while the future is very clear and very strong, and I think a lot of people recognize that, you need patience to get there. The upside of 20 years of growth has its downside, which is that it takes 20 years to grow. So you have to wait patiently for 5% year-on-year growth, for example, for the market, right? We can do better than 5%, but the market grows at 5% year-on-year.
But the fund size doesn't... it's not a 20-year fund, it's a 5-year fund.
Yes. So a lot of, for example, tech investors may not be fully aligned with their growth. And I think companies have to be very robust in planning. Okay, if somebody comes in as an investor now, what is the exit horizon and who would take over that stake? So we have to do a lot of this planning on the capital side.
Yeah, and talk about investors. 99 Group is backed by notable investors such as Quest Ventures, one of our early under-the-radar guests. You have East Ventures, Golden Gate Ventures, Sequoia, and even more. How would you assess your investor base at this moment in time in terms of the expertise they provide, given some are not specifically proptech-focused VCs, some are Southeast Asia-focused VCs, and any further funding plans on the cards?
Again, very observant of you and very diligent of you to have found all this out. So you're exactly right. We started off with tech investors. I think all of those you mentioned are very notable and very brand name tech investors in our ecosystem. And they bring a lot of expertise, a lot of, and a lot of energy as well, to be quite honest, to say that, hey, we can go disrupt things and we can change this around and this is how we can do it. Share a lot of practices in the markets they've seen, the portfolio companies they've seen, down to the detail level, exactly how you do something that achieve fast growth. And that's very, very valuable. But I think in the later years, maybe about 5 to 6 years in, we have very clearly noticed that in the proptech, both our own teams, we actually transform our team to have as many tech people as prop people, right? In our own team, as well as our investor base. So which is why we brought in investors like Mindworks and Gore Capital, which is our largest investor now. So they are prop investors more than tech investors. So they really understand property, and that is the prop part of the prop tech that really helps us in seeing the future much, much better. It's a very unique setup.
Any further funding plans on the cards?
Not at the moment. I mean, we're very well capitalized and we have no active plans to seek funds. I think there are a lot of opportunities we're going after. Yeah. Some of them might be a very interesting opportunity to deploy more capital for. So
you're pursuing some acquisitions?
Well, we'll see. Yeah.
Okay.
But there are opportunities to grow faster than our organic growth.
So when that time comes, you will pursue external funding?
Yes.
Okay.
if that comes.
If okay, any timeline?
We'll see. I'll keep you posted.
Okay. We get that hint, okay? But Darius, I do want to take some time to talk about M&As within the proptech industry because in December 2024, fellow industry peer Property Guru Group, it was acquired by EQT Private Capital Asia. So that took the New York-listed proptech player private, and the deal is set to value Property Guru at an equity value of about $1.1 billion USD. How would you then assess the recent valuations of proptech firms? It doesn't have to be Property Guru. What is your exit plan for your early investors?
So there are a couple of questions there. Let's unpack it. So first, Property Guru or EQT's acquisition of Property Guru. My assessment of that is a bit of both. On one hand, EQT is going to make their money. I have no doubt about it.
Okay.
So I think the acquisition price probably at maybe about 7x revenue or something like that. The industry norms, global comms is maybe 12, 18, somewhere in that range.
Okay.
So they actually, in my opinion, they actually bought it cheap. And that's one. And plus, and there's a lot of built-in growth, right? So even though they're competitor, I can also see clearly that there's a lot of built-in growth that's going to happen. And the problem is that the flip side is this. I question whether it is too early for PE style type of thinking because if you want to come in at 1 billion, you sell at 3 billion in 5 years, right? So and the way to do it is, you cut costs and you squeeze more profit out of your customers. And I personally take a view that that's too early for the market. There's so much more growth, so much more innovation in the market that can be done to put a PE lens on it. So we won't take that position, right? We would think that, hey, we should invest for growth in the future.
Okay.
We don't want to squeeze more margins. We don't want to cut costs. We want to invest. So that's how we would think about the market. Again, not that EQT will win money. I think they will. It's just at what cost for the long term? Is it the best strategy for a 10, 20-year time horizon view?
What is your assessment of competition then with, Property Guru being bought up by EQT?
I think we would continue. Most developed markets like Singapore, London, UK, Australia, so on and so forth, you will find that there are two leading property portals. So I think that's kind of the steady state. That would continue to be the case. We would continue to have a tug of war with them on who gains more, who loses some, who gains some.
Yeah.
And it's got to, that's in the details, right? Like, am I building feature that this HDB upgrader is looking for at this point, right?
Yeah.
Is my pets filter the important one right now? Is the we've got
devil's always in the details.
The details we are competing a lot
execution.
on. Yeah, but the big picture we will both be doing well, in my opinion.
Okay, part 2 of my question just now was what is your exit plan for early investors of 99 Group? Do you intend to go public one day or to be bought up someday? I know a tough question to ask a founder.
Yeah, tough question. I think for us, I think certainly we would seek to stay private longer. And we would find exit path, and we have already done so for many of our early investors. Basically, it's a secondary transaction. Somebody else have more patience or at least have patience for the next 5, 7, 10 years, would come in and take over somebody's stake. Early investor makes some money, so that's good. And so that's probably the way we'll go. If we can continue to do that, we will look to do that and stay private longer, because that would allow us to have
more control,
more importantly, less pressure to really try to maximize profit margin, which we don't think is the correct thing to do.
Okay. Now, before I let you go, Darius, keep us excited. What are some future plans for 99 Group for the rest of this year and perhaps into the next? What can we look forward to right here in Singapore?
Ooh, a lot. I'm not sure what I can talk about. I'm pretty excited. I can say that, this is no surprises. A lot of people are working on AI stuff. We're working on some AI stuff. So we hope to have that hit the light of day soon.
AI tools?
Yeah. AI tools. Yeah.
Okay. I know you're keeping quiet, Mom. At this point in time, we'll wait for the official announcement. Keep us posted.
No, it's not. I don't want to announce. To be honest, it's moving so fast.
Yes.
I'm figuring out every week. Like what did we build last week? Is it going to apply this week? It's a week-to-week evolution. So
Exactly.
we're experimenting ourselves.
All right. Thanks so much for the insights, Darius. That was Darius Matani Cheung, founder and CEO of 99 Group. Thank you so much for joining us on Money FM 89.3.
Thank you, Tian Tian. It's my pleasure.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.